Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. As we're recording this video on January 12th in afternoon trading, shares of Caterpillar are actually at their all-time high right now. Now, we know most stocks actually don't spend most of their time at their all-time high. There's going to be some sort of a drop at some point in the future, but eventually the great businesses rise to the occasion and continue climbing. The question right now for Caterpillar, could it be a buying opportunity at its all-time high? It might be. I know somebody that can help me figure that out. I'm Jason Hall. This is The Smattering. Tyler Crow is here with me to talk about Caterpillar. Hey, Tyler.
I love it when you bring me on to talk industrials. So few people want to talk to me about this.
You're weird that way. I'm weird that way. And our weird watchers are going to get some good knowledge, I think. So let's talk about Caterpillar. This is an industrial manufacturer of heavy machinery. What industries do they supply? How is it set up going forward?
We both have kids under 5 years old. We know precisely what Caterpillar makes because our kids love them right now.
Absolutely.
But the business itself has, I would say, three core drivers. There's construction, like we would think, or residential, commercial construction, roads, bridges, buildings, things like that. Then you have mining and extractives, basically anything that's going to require moving a lot of heavy ore machinery, things like that. And then you have your oil and gas, where you're running pumps, you're having to push millions of gallons of product through a pipeline, offshore oil platforms, things like that. They're going to be the big clients for Caterpillar. And that's what I foresee being a good driver from here in the next couple of years that suggests that maybe.
Well, we're kind of in an interesting spot right now, Tyler, right? It's all over the financial headlines, but there's some reality to it, right? We know we're probably at some level in a recession, or recession is going to come. And a company like Caterpillar is very cyclical because its customers, its end users are very cyclical. And usually it kind of trickles down, right? When the overall economy weakens and softens, its customers tend to kind of circle the wagons, pull back on spending, and that impacts Caterpillar. But right, to a certain extent, is maybe that not exactly the case right now?
Well, yes and no. I'm going to give you the wishy-washy answer that nobody wants to hear.
Very unsatisfying, but very real answer.
Right. So residential construction, yes, it's slowing down precipitously, and typically residential construction is a leading indicator of commercial and other heavy construction. So bridges, buildings, a lot of the heavier things that get made with CAT tend to be move in conjunction with residential at a bit of a lag. So we could be seeing a bit of a slowdown there. But keeping in mind, though, is that the other two major pillars of Caterpillar's business are mining and oil and gas. And those are two areas where I think there's still a lot of opportunity for Caterpillar in the upcoming years. We have had from probably about 2010 to 2018, 2017, probably one of the worst environments for both mining commodities, extractives, as well as oil and gas. These were industries that were probably oversupplied, investing in a lot of marginal return opportunities, bad mines, poor quality reservoirs, things like that. And they've basically spent the past 7 or 8 years, getting in shape, almost like the Rocky montage video of cutting bad assets, getting down debt, getting lean, right, getting cut, getting ready to make returns again. And that's what. And
as a result, they've been living a lot off of their existing heavy machinery assets, right? They're buying as little as they can. They're stealing parts and
sweating,
again, that process of getting lean,
sweating assets,
they're sweating off all of that excess. But we're at a point now where demand continues to be strong. Like I said, the tailwinds for so many of these things, because there's been a lot of underinvestment over that same period in developing the resources. It's kind of at a point where maybe we see some uncertainty in the nearest term, but over the long term, you don't think that's going to be the case?
No, I think over the next 7 to 10 years, because we have sweat assets so hard, there's going to be a replenishment cycle. especially with a lot of caterpillars, and as well as there's going to be expansion. We have talked numerous times of kind of the changing dynamics in mining around things like electric vehicles and all of the new commodities that we have to bring online to make that possible. But at the same time, the underlying theses for a lot of our legacy commodities, iron ore, aluminum, oil and gas, they're still very much in place. We're still a globally growing population, a globally growing in wealth and bringing people up the socioeconomic ladder globally. And all of those things are conducive to the investment in commodities and energy, which is still going to continue for quite some time. And Caterpillar, despite it being a bellwether kind of industrial cyclical, don't want to buy into a recession, it is still a company that on a total return basis has been a great investment over the long term for investors. Compared to the S&P 500 since basically like 1990, it's about tripled the S&P 500. So great companies tend to continue to do great things. And as much as we may change the dynamics of what Caterpillar's end client be, whether it be oil and gas versus lithium mining, they still exist. And they're likely going to still exist as long as we're around. And I think that is a good signal to that Caterpillar, regardless of what it's mining or what it's extracting, is going to continue to be an essential company that is going to probably do well for shareholders over the long term.